There's no doubt gold miners and silver miners have underperformed. Gold is up here at new highs and miners are far off the highs. So they've underperformed, which is why I don't believe gold is off into the taking off to the moon right now. I think we need the miners to participate. But if we zoom into the daily chart, actually miners are already leading the way. So if we just take a look at this chart pattern for miners, they've had a strong pullback, but we've had this rally and this little bull flag pattern, a launch pad. And now they've already broken this high. They're flirting with that. So they're leading the way higher. If we look at silver miners like SILJ, it's built a bottom and it's already popping and breaking to the upside. And then, of course, if we flip back to gold, you can see where gold is here. And gold, let me just clear this chart, clean it up a bit. Gold has not broken this high. Gold miners and silver miners are already breaking out. So it's right now we're seeing miners leading gold and silver.
Gold and silver miners have underperformed gold at new highs, while miners remain far from their peaks. This underperformance suggests gold isn't yet in a runaway rally. However, on the daily chart, miners are showing early leadership. Gold miners have broken key resistance levels, forming bullish patterns, and silver miners are already breaking out. This indicates miners may now be paving the way for further moves in gold and silver. ChrisVermeulen, a seasoned market analyst, explains that when miners lead, gold typically follows, making the outlook for the precious metals space bullish through year-end. Gold has 4 to 6% upside potential, while miners could gain 10 to 15%. Seasonal trends favor a rally in December, with gold and miners historically moving higher. Additionally, a rising stock market could lift miners further as equities gain momentum into January. With decades of experience in trading stocks, ETFs, commodities, and currencies, ChrisVermeulen highlights that, in a strong bull market for precious metals, miners typically lead by bottoming and breaking out first, offering higher leverage than gold itself. Miners are underperforming, far from all-time highs, despite some short-term strength. A broader financial reset may be needed before an accurate bull phase begins. When miners consistently outperform gold and most are in bullish patterns, it signals the start of a significant bull market. At that point, miners become the explosive play for savvy investors, but physical metals are now the preferred choice. Subscribe and turn on the notification bell to stay updated with our latest content. Share your thoughts in the comments. We'd love to hear from you.
The miners lead, then gold should follow. So that short term, I'm bullish for the whole precious metal space going into the end of the year. I think we're going to see all of them kind of work their way up to the highs that we saw back in October. And maybe they're going to pierce a little bit higher. So there is some pretty good upside potential. Like gold itself has got potential for 4, 5, 6% upside. Miners have got 10 to 15% upside. So there's still a good trade there. And seasonality wise, Andy, when we look at gold, there's actually a few tailwinds helping this trade. Seasonality wise, which is we're pretty much right here for gold in December. Usually we see the precious metal space push higher. And to boot, if you're looking at the equity side on precious metals, we also see the equities market, the stock market naturally go up. And if the stock market goes up, it naturally wants to lift all stocks with it. And gold miners are obviously a stock. So there's definitely some really good tailwinds, I think, to push the precious metal space and miners up into the end of into the end of December and into January. So when we're in a really strong bull market in precious metals, for gold, the miners should lead the way. They should bottom first. They should rally and break out of a chart pattern first, and then typically gold follows. So, savvy investors, they want to move into the leverage play. If they think gold's going to bottom, they're not going to buy slow moving gold. They're going to be like, I'm going to go buy a gold mining stock. If gold moves up 5%, the mining stock could move 20%. So the savvy investors, when we are in a bullish environment, a very strong bullish phase, they'll move into miners first, and then gold will follow suit. And we really haven't been in that. When we look at where gold is at all-time highs and where miners like GDX or any of the other miner ETFs, they're nowhere near all-time highs when we look back. They're totally underperforming. Just short term on the daily chart, they're showing some signs of life for the next 1 or 2 months where I think miners and precious metals should be strong, and they are outperforming. But I think what we need to wait for is for a financial reset for gold, silver miners, real estate, the equities market in general, like the stock indexes, to pull back and have a reset. And then after that, gold miners should bottom first. Gold and silver should bottom first. And then we'll be off to the races. And when gold miners are outperforming gold, week after week and leading the charge, and majority of gold miners are in a bullish pattern, what percentage of gold stocks are bullish, are trending higher? Then you'll get really excited. I'll be really excited about the market. But right now they're underperforming in general from the big picture. And so I don't believe we're in that bull market phase. But once we kick into it, I mean, it's something I'll be talking about all the time. I'll be getting involved with miners. I'm not into miners right now. I just like physical metals. But there will be a time when we start that new major bull market where miners outperform, and you really just want to be involved in miners because they're going to be explosive.
In an interview with Andy, ChrisVermeulen explains that a firm bottom in miners and gold often follows a sharp sell-off, like in 2008, cleansing valuations. Afterward, a sharp rebound signals big money entering, with large and small cap miners seeing heavy volume. Sentiment will likely be very bearish, with investors disillusioned after losses. As gold, silver, and miners stabilize and cross key moving averages, interest and volume grow, carving out a significant bottom. This process takes time and requires patience, but sets the stage for a strong upward trend when no one expects it. Meanwhile, the bond market, for example TLT, is showing signs of forming a bottom, though it's not ready yet. Bonds could rally if stocks crash and the Fed cuts rates. The US dollar index is another key play, continuing its long-term uptrend with higher highs and lows, often spiking during global turmoil. Historically, the dollar surged in crises like 2008 and 2022. The US dollar's strength, especially against the Canadian dollar, allows Canadians to benefit from a favorable exchange rate. A dollar rally could lead to a strategic shift back into Canadian dollars as conditions normalize. Now, let's get back to the interview.
Cleanse. Like in 2008, we saw this massive waterfall sell-off. I would love to see a huge, sharp sell-off in miners and gold. But then eventually I'm going to want to see a very sharp rebound where miners all bottom, big money is moving in across the board into all miners, large caps, small caps. Gold also puts in a bottom with big volume. The sentiment for the precious metal space from the masses will be very bearish. Nobody will want to hold them because they've all just taken a beating. And of course, the sentiment for the overall stock market of investors as a whole are going to be like, I hate the stock market. I lost a ton of money. This is the worst thing ever. And so we need that really terrible, unfortunately, that bias where nobody wants involved in anything. But then we see gold, silver miners just come to life. It'll be a knee-jerk reaction kind of usually bottom. So if we were to go back to 2008, where we started to see a bottom, we'll eventually see some type of knee-jerk reaction. And eventually you'll start to get above key moving averages. We'll see gold also putting in a bottom. And it does take some time for a major bottom to carve itself out, but we'll see volume start to increase in this space. You can see how there is really very little volume and interest, and eventually it starts to get bigger and bigger. So there's a lot of things that kind of have to layer in. It does take time. You'll never nail the bottom unless you pick it, but really we're going to let things have to mature. Somewhere in this phase eventually is where we'd probably see like the miners put in this major bottom. And gold will have done the same, hopefully. And then we start to see this overall trend start to move higher. So we really just need a really terrible sentiment. Nobody wants it. Everybody's been flushed out, sold, and that creates that opportunity. Two plays that I'm interested in. The first one is the bond market, like TLT. It is carving out what looks to be like a signature bottom. I wouldn't try to pick it yet, but it looks like it's trying to turn a corner. Now there are a bunch of wild trump cards in here, pardon the pun, with tariffs, which could increase inflation, which means interest rates won't really go down, which means bonds will stay here. But if we have blood on Wall Street and stocks are crashing and things get really bad, the Fed still may cut rates. And as everything else goes down, bonds could actually have a really good rally. So I'm drooling over this chart pattern because it does look really good. It's not quite ready yet as an investment, but it could become a very good player.
The precious metals space, bond market, and US dollar present intriguing opportunities amid current market dynamics. Gold and silver miners show early signs of strength, potentially paving the way for broader moves in precious metals. At the same time, the bond market and the US dollar could offer significant plays during periods of market turmoil. Patience and timing remain crucial as these trends evolve. Do you believe the recent performance of miners signals the start of a significant bull market in precious metals? How do you plan to position your portfolio in anticipation of potential bonds or US dollar moves? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.